Welcome to my midweek market review, 17th March 2021. I am Sagar Nandi, retired IT professional swing trading stocks using Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my live trading, and those are the systems I'll use today also. They run on the underlying platforms of TradeStation and MetaStock. That was the last slide of the presentation. Let's continue with the live system. Hi Jerry. As usual, let's start with a review of the global market, starting with Australian index, AXJO. For the global markets, I'm going to use Q Global running on MetaStock, and as usual, using the standard weekly daily at a glance template. For several weeks, Australian market is moving sideways. It has multiple daily candles with lower tails as well as upper tails, showing the indecision in the market. In the weekly, after displaying the bearish headwind, it could not go up anymore. Currently, it is moving sideways. We'll avoid taking directional trades in Australian market right now. And that may be the situation in several global markets. Let's find out. Japanese index topics. Well, this is not moving sideways. It bounced up nicely from the daily and weekly trendline support. If you watch my earlier YouTube live sessions when price was right at the trendline support in weekly, I mentioned that it was likely price would go up from there. When price was here in daily, I mentioned that if price continues to go up on the topics chart, you might buy individual fundamentally strong stocks. That was useful. Price has gone up since then and it is near the upper boundary. It is extended overbought, shown by the stretch band indicator being overbought for 4 successive days. We wouldn't buy here when price is near the upper boundary and stretch indicator is showing overbought condition. We'd like to buy at swing low, and you keep on seeing this theme of buying at swing lows, not at breakout points. It keeps on helping us. It helps us to buy with lower risk, and we are able to mostly book profit while others are taking notice. That happened in topics, and that probably happened in the USA market also. We'll review some of the trades I shared earlier. Japanese market is bullish, much more bullish than the Australian market now. However, overbought, will not like to buy new long positions right now. Next, Chinese market, CSI 300 index. Chinese market dropped after displaying the bearish headwind in the weekly chart. When it came to the trendline support, once again, I mentioned that that was not the time to short. If anything, that was the time to look for buy setups. Price stabilized at the trendline support. So far, this week's candle shape is bullish. Daily is also holding on to the trendline support. Once again, if we use the weekly memory support to enter a buy position, those trades would be in at least a small profit. Now, if the instrument does not have a proper Q trade setup, sometimes you may take a, or at least I do that sometimes I may take a discretionary trade relying on the very robust trend line support. But in that case, I would like to trade the instrument with verticals so that I don't get stopped out. And if it is a vertical with time decay in my favor, which would be a short put vertical in this case, established right on this day, the short put vertical would be in profit, both because price went up, not much but little bit, that is due to the delta move, and then it will also make profit because of time decay. Not much, but it seems to work better than simply buying the stock when there is no proper Q trade setup. And I do that sometimes. Let me divert a bit. I did that for gold. Where is gold? In the Q Skype chat, there are a few members who regularly share their ideas, and I do sometimes share ideas. I also share on my website, sagarnandi.com. But in my website, sagarnandi.com, when I share under this category, 360 degrees strategies, techniques and ideas, I tend to only share ideas that are 360 degrees trade setups, meaning where industry, fundamental, technical, all are aligned. Those are very high probability trades. And other than industry, fundamental, technical, of course, we always look at the market. In a bullish market, I like to buy in strong industry, stocks that are fundamentally strong and that are giving technical buy setup. Those are the robust setups that I explain always before knowing the result on my website under this category, 360 degrees trading techniques and ideas. On the Q Skype chat, sometimes I share setups that are not conforming to the 360 degrees robustness, and GLD was one of them. It was an ETF. Let's look at GLD. If you remember earlier, somewhere here I traded gold using futures and I booked quick profit. That was useful and price dropped after that. If you followed the earlier YouTubes, you would know exactly when and why I entered a long position that was using overnight market move, and exactly why and when I exited the long position with a profit. That was because price was going below early range low on Q fine tune chart. That was in this area. Then price dropped and it displayed a bullish headwind, possible reversal signal. There was no headwind trade setup if you applied all the checklist conditions. That is why I did not share it on the forum, but the Q Skype group knew that I had a long position in GLD. And I might have mentioned in my earlier YouTube live sessions also. So I traded that using a vertical. Initiated the long call vertical right on this day, and you see on this day price actually gapped down considerably. If I used a stop, would I get stopped out using the ETF? I don't know, I could check that out. But in any case, the purpose of trading with vertical was that even this gap down move would not affect my discipline because it was a defined risk trade to start with. So I could continue to hold it. That day certainly reversed very well. Next day it went up, and next day it tried to go above the trend line resistance. I was aware of the trend line resistance when I took the trade. So when it tried to go above trend line resistance, I was happy, but this was an intraday chart, daily chart, but not at the market close. I saw that price was reversing. I didn't want to erode my profit. For verticals, I like to book profit at 50% of max profit. However, in earlier YouTube live sessions, I explained if I am trading verticals or you are trading verticals, we have to be aware of overstaying the welcome period. What is the welcome period? When price was below the trend line resistance, that was welcome period. If price could break above trend line resistance, our welcome period would continue. But as of this time, it looked like price was going to come down below trend line resistance, and I did not want to overstay my welcome period, and I exited with a decent 16% profit. I had bought the vertical at 2.07 and closed it at 2.442 without waiting. That was a 16% profit. I didn't wait to get 50% of max profit. This was a case where there was no proper Q trade setup if we applied the checklist, but I was bullish and I used verticals to take a defined risk trade and exited it also at a Q resistance level. Let's see when I posted it. 16th March, yesterday. So I exited it. I shared it when I exited it at 11:13 a.m. Eastern Standard Time. I have no crystal ball, so I wouldn't know how it closed. I wouldn't know at that time, but it was looking like coming down. I didn't check out GLD after that. Let's have a look at that. GLD. Now whether it would come down after my exit or go up after my exit is not my concern because I exited with discipline, and as it happens it closed little bit lower from where I booked my profit. On hindsight it looked like a good idea, but I want to reinforce again one thought. On hindsight it was a good idea not because price came down. Price could go up, but still it would be a good idea because I made a disciplined exit based on Q guidelines. I can see in overnight market GLD is down again. Again, that would not be the reason I will say that the exit was a nice exit, not because my profit was maximized apparently. As of now, profit was maximized at that time. I wouldn't claim that. I would claim it was a great exit because I followed Q discipline. Coming back to China market, if Chinese market allows verticals, then following a similar logic, when I explained that price was likely to bounce up from weekly memory support, I would like to trade with verticals. That would give me more profit than stock because time decay would be in my favor. And another big reason is I would not get easily stopped out. Right now it is looking bullish because of the shape in the weekly and because of the trend line support in weekly, daily both. However, there is no trade setup in CSI 300 right now. I would have bought right on this day when I explained it in my earlier YouTube live sessions. Over longer term it is bullish. Let's look at UK market, FTSE index. This is another market that is moving sideways for a long time. There was a bearish headwind in weekly at this point. Since then, price could not go up above the watermark created by the bearish headwind. Moving sideways at the upper edge of the sideways range. If anything, we'd like to look for shorting opportunities. FTSE itself doesn't have a short setup because trendline resistance, sorry, not trendline support is nearby. If this trend line support is broken, we may look for shorting opportunities in individual fundamentally weak stocks. That would be using the box kind of scenario on the index and then looking for weakness in individual stocks. Moving sideways, and Nifty 50 India index that used to be the strongest of the global markets. Let's have a look at that. In the last webinar also I mentioned that last several webinars that it is starting to slow down, not going up anymore. If you look at weekly chart, of course it is still remaining the strongest of the global markets. However, since this bearish headwind came, price could not go up. Again, it could not go up above the watermark created by the bearish headwind in weekly. Instead, it is moving sideways. It is inside a triangle pattern created by trendline resistance and support. Because it is near support both in daily and weekly, we are not going to look for short setup. We are not going to look for long setup also. Traffic light and backdrop both colors are bearish. No trade in the India market. Therefore, we saw three of the global markets are moving sideways. India market, UK market and Australia market. Japanese market is the most bullish market and Chinese market dropped heavily and then stabilized, kind of exhaustion setup you may say. What about the USA market? Let's check that out. Let's start with a tweet again. These are tweets from my Twitter page. I share tweets on different instruments as I see them. This is yesterday's tweet again. 16th March, again in the morning session, 11:40. I am part of several chat groups. Q Skype chat group is one of them, and I always kind of am amazed at how people are slow to understand the market move. I took some long positions right at the bottom of swing low of the market ETFs, and people were all bearish at that time. It's not that they don't have robust techniques, they have, but those techniques are meant for something else, not for swing trading, capturing the swing lows, not for that. That I am convinced, because when I was buying at swing lows based on Q techniques, they were all bearish. And yesterday or one day earlier, they started to buy stocks and talking about follow through day and which stocks are breaking out. And again, that's not good or bad, it's just a different technique. Buying swing lows works well for me, and certainly buying breakouts may work for other traders. I do take breakouts also sometimes, but not a breakout trader in general. Now, once again, when yesterday people were talking about follow through day and whether they could buy breakouts yesterday, I watched several things. One was Q Edge, and Q Edge was showing as of that time, 11:40 a.m. Eastern Standard Time, 82% of sectors were down. 80% of industries were down, 76% of stocks were down. That was a bearish market. No second thought about that. Why would I like to buy stocks on a bearish day? It was at swing high. I bought many positions at swing low and I was booking profit in many of them yesterday and even before that. As of 11:40 a.m. yesterday, only 2 sectors were up, 9 were down. Which ones were up? Infotech and communication services. Infotech was up probably because of the big caps, mega caps. Communication services was up by a small percentage also. Most of the sectors are down and some were down by very large percentage. That was not a day to take new positions. That was one thing I observed and I shared. And I also keep an eye on the intraday market breadth using Q Elite, where I look at the Nasdaq, NYSE, advanced decline, up down volume for both of them, these two exchanges composites, and then I look at the same data, advanced decline and up down volume for the four major indices. In this case I am using the ETFs IWM, DIA, QQQ, SPY. This is what I saw yesterday and I might have shared that also. Yesterday from the beginning Nasdaq advanced decline was down, up down volume was practically down for the whole day. The same was true for NYSE. Advanced decline was down, up down volume was down for the whole day. Russell 2000, which was the strongest recently, there also advanced decline, up down volume both were down throughout the day. For Dow Jones, which was the second strongest, between Dow Jones and IWM they were alternating in recent days which one was strongest, and yesterday Dow Jones advanced decline was neutral, neither up nor down. Up down volume was up. Let's look at S&P 500 first. Advanced decline was down throughout the day. Up down volume was not going either way. Balanced, you may say, zigzagging around the zero line. Only Nasdaq 100 advanced decline was up in the beginning and it tilted later, but it still remained above zero throughout the day. And up down volume for Nasdaq 100 was strong. That was showing that the market was up, meaning QQQ was up, and for some time QQQ was up throughout the day, and for some time SPY was also up, S&P 500. We could study the internal market breadth and infer from there that the strength was because of mega caps. And on a monitor during market hours, I keep an eye on the extended FANG stocks. Let's open that workspace also. Keeping an eye on the extended FANG stocks using Q fine-tune chart. Fit it in the window. And you can see Facebook was up, Apple was up. Other than Tesla, all the other mega caps, Facebook, Apple, Amazon, Netflix, Google, all were up. Facebook was up and above the early range high throughout the day. Apple up from previous day's close. It went above early range high, came down but stayed inside early range. The same is true for Amazon. Went up, came down but stayed within early range above previous day's close. Netflix almost throughout the day stayed within early range. Google went above early range high, came down but stayed within early range and above the early range midline. Tesla was the only one that started higher, came down below early range low and continued to drop throughout the day, closing below previous day's low also. Only Tesla was weak, all the other FANG stocks were strong. And when you combine that insight with what you saw from the market breadth intraday on Q Elite, you could explain why Infotech was strong. Not here, not at the close of the day when I shared the tweet. You could understand why Infotech was strong. not by big percentage but by small percentage, and that was a reason for me to alert traders, those who are following Q techniques at least, that this was not a day to take new long trades. Let's look at the market ETFs now to see how they closed. S&P 500 ETF SPY made a new all-time high yesterday but closed little bit lower. Traffic light color is still bullish. It is near the watermark level created by the bearish headwind. It has already recovered significantly from the swing low. And now I will reiterate my point again. I started sharing buying ideas on this day and further on this day. 100% of those trades made a profit. 100%. I was not looking for buy setups in last 4 days when price was already near the watermark resistance. In fact, somewhere down the line, I even shorted some fundamentally weak, very well known, and others may be bullish on that, but using Q technique, I shorted the stock. I will share that. I am not going to buy SPY now. Am I going to short it today? No. It is extended but still bullish, but I am not going to buy it. And if I look at QQQ, again it recovered significantly from the recent low. Yesterday it closed below opening price, though above previous day's close, but indecisive shape candle, hanging candle, I was not going to buy. Dia, recently it was the strongest, and once again you see the usefulness of the trendline support on a longer time frame. Right when price came to the trendline support in weekly, at that time I mentioned the one market ETF I was not going to short was Dia, because it had trendline support in weekly and maybe it had daily support also. Looking at that, I was not at all thinking of shorting Dia. Dia after that became the best performer, recovered very nicely from the swing low. It was above upper boundary and I was not going to buy Dia at the top. In fact, when Dia was around here, I explained in the YouTube live session, I looked at the Dow components and using bearish headwind signal, I shorted a stock. I will look at that later. Right now it is bullish but extended, not going to buy. And IWM, again it recovered nicely from swing low near upper boundary. I'm not going to buy now. Instead, it displayed a bear release signal in the daily. If it can come below the watermark resistance, that will create a false upside breakout that is bearish. The weekly has already turned bearish in color. So if it continues to go down today, there may be shorting opportunities in many small cap stocks. Weekly displayed a bear release signal also. You see how nicely backdrop color was bullish, price tilted down little bit, but the backdrop color has flipped to bearish, telling that it is okay to look for shorting ideas in small cap stocks. None of the market ETFs are bearish, but they are extended and I'm not going to buy any of them right now. Today also Fed rate decision day. You know, I use Zenith to track the market events, and today at 2 p.m. is the Fed funds target rate announcement that oftentimes does not move the market, but it has the potential to move the market. That is why it may be prudent not to take new trades today before that. And in fact, even After that, it's safer to start a new trade tomorrow. And if you wanted to start a trade using fine-tuned chart in the morning session, that is possible, but you may be aware of the 2 p.m. event that may move the market unpredictably. So I am not looking to trade any new position in the morning session, at least today, and probably not in the afternoon session also. If I at all look for trades now, as I explained from the market ETFs, I am not going to look for buy setups. Let's look at market breadth using Q edge now. And let's compare the end of day picture with the picture I shared on Twitter. When I shared it at 11:40 a.m. New York time, 82% sectors were down, 80% industry, 76. 82, 80, 76. That was the bearishness. And two sectors were up, infotech and com services, 82, 80, 76. Let's see how it ended yesterday. Sectors 100% down, industry 89% down, stock 78% down, and all the sectors turned negative at the close of the day. So my alert on Twitter that it was not a day to buy stocks proved useful. And it is not difficult once you use these 100% real-time systems, QH, that show sector, industry, rotation, and strength, weakness in real time, 100% real time. If you use Q Elite, market breadth, that is in 100% real time, you look at the extended FANG stocks, you have pretty good idea what is going on and which are the days to take new long trades and which are the days not to initiate trades. Instead, those are probably days to book profit, as I did yesterday. Also, if you look at the bucket analysis, in the last YouTube session I had with you on Saturday, at that time, percentage of stocks in the extended bucket was around 20. And I mentioned, based on previous observations, that it tends to go to around 30 before pulling back. And between weekend, that is between Friday's close and today, it in fact went up to somewhere around 27. Didn't quite hit 30, it reached around 27 and it started pulling back. That bucket analysis that is shown also in real time could help you to see the reversal. It is still bullish, of course. 82% of the stocks are above the bucket midline. However, it is extended and the reversal in percentage of stocks in the most extended bucket from 27% to 5.1% could also help you decide the weakness in the last few days. If we look at the very useful 1 month to 1 day sector, industry, stock advanced decline breadth, now we can see it is gradually weakening. 1 month is remaining bullish, it seems forever. 10 days also bullish, no doubt about it. Even 5 days still bullish, but last 2 days and yesterday, these two periods are now bearish. That could lead us to take some short trades, probably in weak fundamental stocks. But even if we didn't short yesterday or day before yesterday, we could at least book profit in existing positions. That is what I did. And I shared them on Q Skype chat and also on Twitter and my website. 5 days view is still bullish, but last 2 days and yesterday was bearish. Let's look at Finder picture. That shows the technical breadth, and here you will find something interesting and very useful once again. The weekly balance between technical signals is 50-50. How nice, 50-50, exactly 50-50. If we see at all signals, it is balanced. But one thing immediately catches your attention, or it should, is the large percentage of reversal signals, and that is coming from a very large number of bearish headwind signals. Time and time and time again, I have seen when there is that large number of bearish headwinds, when price is at the top, it pulls back. We may look at some of the stocks displaying bearish headwinds. In fact, one of them I shorted earlier. We'll have a look at that. And that is how the Q reversal signals help us not only protect profit in existing long positions, but to short the top if you are willing to do that. All signals are balanced. Strength signals are very bullish, 94% bullish. Trend continuation, very bullish, 78% bullish. But reversals, 91% bearish. That would raise a red flag. And yesterday's picture, that is bearish all throughout across all categories, including reversals. 90% of the reversals are bearish. That is also signaling caution. If we look at the market internals, let's look at least some of them. Let's look at the mega cap. We saw mega cap was up. That was the reason for QQQ to hold up yesterday. If you remember, when mega cap top 20 custom index was here, I said I was not going to buy even if I could buy it. When price came to the trendline support, I mentioned that was the time to buy. Since then, price has gone up. Again, if this instrument allowed verticals, the most effective instrument in my experience would have been to trade with verticals, or if you were comfortable holding on to the instrument longer term, you could short the put. I have shorted the put in several instruments at swing low recently, and 100% of them exited at the initial profit target. That was 50% of max profit. We may review some of them later. Last few days, price is holding on to the price level for this custom index, not going anywhere. The relative strength relative to the market is still weak. So mega caps are not the stocks I'm looking to buy now. I'm not going to short it also. It's just moving sideways. Even if we step back for a long period, it is moving sideways. Relatively, it is weaker. If we look at, let's look at Nasdaq as a whole. Now, what you will see is that percentage of stocks below 50-day MA rolled over and rolled over again at these 2 points. Then it recovered over last few days but didn't quite reach the average line. The percentage of stocks above 200 MA rolled over and just reached the average line. These arrows are showing that under the hood it had strength accumulation days on Nasdaq. However, the strength was not enough for the percentage of stocks above 50 MA to go to the average line. Now I wanted to contrast that somewhat with the major market indices. That was Nasdaq as a whole. If we look at the major indices, that is Dow Jones Industrials, Nasdaq 100, S&P 1500, S&P 500. Dow Jones easily pierced through the average line. Nasdaq 100 also pierced through the average line, percentage of stocks above 50 MA. Same happened for S&P 500. Sorry, S&P 1500, 500, Dow Jones, but Nasdaq couldn't reach the average line yet. But Nasdaq 100 couldn't. Whatever. Let me check again. What happened to Nasdaq as a whole? Also couldn't reach the average line yet. So that is showing some weakness, though it is showing accumulation days at the same time. So some stocks are going up, mega caps were not so strong, and if we see the total view, Nasdaq is actually not weak. Over last 4 days, 1 2 3 4, it has given accumulation for 4 days in a row. The weekly picture has given accumulation for 3 weeks in a row. Last 2 weeks, the current week is still going on. Last 2 weeks, meaning this week and previous week, because of Nasdaq, and the week before that because of Dow Jones. All these counts are 1. That's why they are not so actionable. But what I wanted to point out is that under the hood, Nasdaq as a whole is not weak. It is very strong. It has been very strong last couple of days. That was the time when many stocks recovered from swing lows, and I could capture them. You could capture them at the swing low point and book profit in a timely fashion. One of them was NNDM. Let's look at the forum post for NNDM. An Israel-based tech company bouncing from memory trendline support. Q memory trendline supports work pretty well, and that can be used as a part of bounce trade setup, and you can also improvise if you see weekly daily trendline support, and if you see that happening in a fundamentally strong stock, maybe even in strong industry. I shared it 9 days ago. That was 8th March. The industry was strong. I didn't put the snapshot, but I checked and mentioned the industry was strong. Not enough data about earnings, maybe a relatively new stock, and bounce is looking nice. This was the snapshot I attached. It had a very sharp drop in the weekly chart. Same thing happened in the daily. Incidentally, the drop happened right after the bearish headwind, and we saw as of today there are a large number of bearish headwinds in weekly interval, and even in daily interval there are some. So once again the bearish headwind could catch the very top, dropped sharply, then I picked it up right at the bottom when it was going up from trendline support, giving a bounce long trade setup. On this day, as of this snapshot, it met all the requirements of the bounce long trade setup. Now I'm in a different time zone, opposite time zone to the USA market. So sometimes I take a trade using intraday chart if I'm bullish, and at the end of the day the chart signal may change. It was a case like that. I was already in the trade NNDM, and later on I attached the snapshot at the close of the day. At the close of the day, price came down. So if you were tracking it based on after market hours analysis or just before market close, you wouldn't take the long trade. But as you know, I have mentioned earlier, because of my time zone difference, sometimes I take a trade and overall they work out well. Some of them may get stopped out, some of them may go up, no issue, but it was giving a bounce setup when I looked at it and I first shared it. Let's look at the stock today. This is NNDM. I shared it based on bounce from trendline support on this day. The next day, bounce setup has a requirement of closing above previous day's close, which was true when I shared it and I took a long trade. And after that, price nicely went up. And I once again reiterate, others were looking at buying in last couple of days. And I had already recovered my risk distance as profit and I booked profit. This was one stock where I booked profit, but not the only stock. Let's look at Twitter. Let's look at Twitter. Here, utilities. Okay, let's look at the original post. I tweeted about my exit, but initially I shared the idea on 9th March. Shall we look at SPY on 9th March? Here, I shared the idea on this day. And I shared some trade ideas on this day also. If I can find them out, I will look for them. But on this day, I shared FE, the utility stock, 9th March. What did I see? It had a breakout setup and a bullish flow. It was above both yellow and white direction lines, and those lines themselves were going up. It was in a confirmed uptrend. The utilities sector as a whole was weak for a long time, so I expected the utilities industries also to be weak, and it was starting to strengthen the relative score, and also it was accelerating. The industry score allowed me to buy. And FE was undervalued. It didn't have great earnings growth. That is fine. I am allowed to buy based on either valuation or earnings growth in Q technique, any one of them. If I have both of them, great, but any one of them is also fine. And it had a nice dividend yield of 4.6%. It was up by 2.76% at that time. I think I came to find FE based on this stock WEC. Somebody must have mentioned about WEC in the Q Skype chat, and whenever I hear about a stock, sometimes I don't outright buy it. I never outright go and buy it. I like to do a peer analysis like I did using Q Vital in this case. And as I shared in this post, to me, FE looked like a better buy. Also based on its technicals, and this is how FE looked like. This was the earnings week. After that, price could not go down. It tried to go down here but recovered, and when I shared it, the backdrop color was bullish, shape was bullish again. In the daily, this was the sharp move up associated with earnings. It pulled back. This long lower tail in the weekly chart was the result of this pullback. Then it started to go up again after displaying long lower tail candles, broke above trend line resistance. This day the shape was indecisive. Next day the shape was bullish, color was bullish. It had a bullish flow also. It regained the white direction line. Yellow direction line was already below price. This was also a kind of pullback setup. Usually pullback setups come are more strong, you may say, more robust when yellow direction line is above white direction line. In this case that was not true, but in a sense it was regaining both the direction lines, so it could be considered a pullback in some way. In any case, it had a breakout setup and also a bullish flow, that is go with flow setup. The go with flow setup, if you applied the checklist conditions, all were being met, and for breakout setup it was breaking out from the trend line resistance. So I took a long position. It had a nice dividend, so I didn't mind taking the long position with short put. Now one way to decide the strike price is to use the next trend line support. That was at that time, if you see, it was maybe around 32.7, 32.70 cents, $32.70 below 33. Now I looked at those strikes here, but the premium was too small, so I didn't short that. Instead, I think I shorted around this price, 34 or around that, shorted that put. And I booked I placed my GTC order to book profit at 50% of max profit, and I shared the follow-up snapshot. Let's see, yesterday I think. Yes, March 16th, 11:30 a.m. Eastern Standard Time. I shared it yesterday. Follow-up. This was my breakout and bullish flow setup. I shorted the 34 strike, April 16 expiry, 16th April. I shorted it for 1.12, and when I shared the snapshot, it was 0.55. It already had 51% of max profit. Soon after I shared the snapshot, I exited the trade, and I mentioned that in the post also. I exited at slightly better than 50% of max profit. Again, a trade taken with confidence, and instead of blindly catching the swing low, I wouldn't do that, because in this case there was a trendline resistance. I waited for that to be broken, used the stock strength, fundamental strength in terms of valuation, the dividend yield, the industry's acceleration to short the put, and booked profit with discipline. This is a trade where I booked profit yesterday. This was not the only trade. I described gold earlier, GLD, that long put vertical I exited yesterday. Let's look at another stock, MUX. This was a gold miner, and I tweeted it yesterday, I think yesterday again. See, yesterday when others were thinking of buying, I was booking profits or exiting at break even. Usually I don't exit with break even. Either I hit my profit target or stop loss. Sometimes I do exit at break even, and there were some reasons, and it may be worthwhile explaining those reasons. This was a gold mining stock. Let's look at the first post and follow up from there how I managed my position. First, let's see when I started it. March 12th, 1:23 p.m. The gold miners were not really very strong. The relative score was improving. There was some acceleration, but this is not something that I would say it's a Q360 degree stress. It didn't have enough strength, neither in terms of score nor in terms of acceleration, to qualify as a good Q360 degree stress. Industry was improving but not so strong. You can review back FE, the utility stock that I shared just now. We went through that. There the industry was clearly accelerating. Gold miners was accelerating but not so strongly. And see the fundamentals. For MUX, valuation was overvalued, not undervalued. It has earnings growth, but reducing earnings growth from previous quarter, and not very high in the current quarter. The current quarter is not in bright green color. So in terms of fundamentals, it was not again a Q360 degrees trade. Overvalued with decreasing earnings growth, that is not a Q360 degrees trade. Why I highlighted MUX here is that among the gold miners on that day, MUX was looking better. Among the stocks that were up by more than 1% in gold mining industry, MUX at that time was looking the best. Again, among the stocks that were up by at least 1% on that day, on 12th March. So I looked at MUX, and let's look at the chart. The chart looked nice. In daily, it sharply went up here, pulled back, regained the yellow and white direction lines with bullish flow. The weekly color was neutral, shape was bullish. So it gave a pullback long trade setup. And that was the time I took a long trade. Now, when my trade is Q360 degrees trade, I have much more confidence holding on to it, let it play out. This was not a Q360 degrees trade. That was one reason I exited, and I mentioned earlier how I track the stocks using Zenith. If we look at MUX, the gold mining stock, the stocks that I hold, I keep an eye on events happening on those stocks. And I saw this news. In Zenith, the major events regarding a stock, they are highlighted in red color and also with this fire symbol. This is the event chart I shared earlier, and I saw this report, disruption of Mexican operation, and there was some more detail. I don't trade based on news, but this seemed like a major event, otherwise Reuters would not highlight it in red, and it was talking about disruption in the Mexican operation. Now on that day, then I switched to Q fine tune chart, and let's look at that now. MUX. What happened afterwards is not a decision making factor. What happens in real time is affecting my decision making. It was on this day. I exited it. Let's check it again. Yes, yesterday. March 16, I exited it. Okay, let's look at the snapshot when I followed up with my exit decision. See, initially yesterday MUX came down. That might be because of the news event. Then it recovered and it went just above my break-even price. I didn't like the news, and also I remembered the fact that it was not a Q360 degrees trend. And then I also saw GLD was coming down on the intraday chart. Let's look at GLD, the gold ETF. Let's look at it using the intraday fine-tune chart. In the beginning of the day, yesterday GLD was up, but MUX was down. That was also a concern for me, and later on GLD also came down. Even after that, it stabilized. But these things, that gold was up, MUX was down, MUX had a major news, MUX was not a Q360 degrees trade, and the Fed meeting is coming today. These together helped me to exit the trade. Will it go up next? Will it go down next? I don't know. But these were the reasons behind me exiting this trade at break even. What were they again? It was not a Q360 degrees trade. Fundamentally, it was not strong. Industry was also not really so strong. Technicals were the main reason to buy. Fed meeting is coming. That is today. I yesterday exited the position. And MUX announced disruptions in Mexican operations. GLD was up, but MUX was down. Because of this 5-6 reasons, I exited the position at break even. I think I did a good job. Whenever I mention that I traded nicely, it is not in the sense that I made a large profit or small profit or loss. Even if I make a loss, I think it's a good trade if I am following my discipline. And I think in this case, there were enough reasons to justify the long position. We are at 1 hour point. Let's look at one stock that I wanted to mention, Disney. Dow Jones Industrials was the strongest of the market ETFs recently. Still, right on this day when the bearish headwind came in daily, it also created a false upside breakout at the watermark created by the previous bearish headwind. I shorted Disney. I mentioned it at that time. I shorted it with verticals, I think long put verticals. And afterwards, if we look at Dia, this was the day 9th March. And I remember explaining it. Was there an YouTube live session on 9th March? Let's see. Yes, Wednesday pre-market hour. So right on this day, I explained that why I would short Disney. 9th March, and let's look at Daya. 9th March. See, after 9th March, Daya has continued to go up, made new and again new all-time high again and again for several days in a row. But if we look at Disney, it has not gone up. If anything, it has come down. Traffic light color has turned red, relative performance tilting down. And I remember one person on Q Skype chat mentioned that he was bearish on Disney. I think he mentioned it on, I think yesterday. But if you are using the bearish headwind signal effectively, you could be short the instrument earlier. Again, when the dia itself was very strong, market was strong, I prefer to short using vertical, so I have less chance of stopping out. Of course, it never approached my stop, which would be just above recent high if I use the stock itself as shorting instrument. But I prefer to use the vertical so that I don't get stopped out by a whipsaw. It was looking weak. I explained in that video using fundamentals analysis also. I am not going to do that again. Disney was fundamentally weak, though many people were probably bullish because the stock was at all-time high. But I shorted it and I'm holding on to the short position. It has not hit my profit target. It's a vertical trade, so I have set my GTC order at 50% of max profit. Again, I would not like to overstay my welcome period. So if the stock comes to the trend line support, these two of them, and starts to go up or pauses there, I'm going to book my profit even if it is below 50%. And if it continues to go down, I will hold on to the position, letting it play out and exit at the 50% of max profit rate. I can see today in overnight market it is down 0.7%. Good for me. Again, I use the bearish headwind. Now, give me few minutes if you would. Remember, there were a large number of bearish headwinds in the weekly chart. That is always a cause for concern. Okay, let's go back to Disney. In fact, Disney is one of them. Disney has now displayed a bearish headwind also. But I am already short Disney using the daily bearish headwind. Now let's look at some of the other stocks. This 150 stocks displaying bearish headwind. Many of them, let's choose 10. The 10, okay, let's flag the bearish headwind column. 152, let's choose 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And let's look at them using Q Global. I'm going to first put them in quote center, make a list out of them. I chose the quote center application, transferring the symbols to quote center. It popped up on another monitor. I always save the list as a same name I use all the time. Yes, it already exists, no problem. I'm going to save it. So what are these stocks? These are the 10 worst performing stocks yesterday, not yesterday, 10 worst performing stocks this week. Remember, I'm looking at the weekly finder. So this percentage change is the weekly change so far. 10 worst performing weekly stocks that are also giving bearish headwind signal. And let me open first of them, move it out to the other monitor, change the template to weekly daily at a glance. Now I can scroll through them one by one by using Alt right arrow or using this right arrow. Scroll through them using the right arrow or left arrow at the bottom. Or I could use Alt right arrow, Alt down arrow, or left arrow on the keyboard. Let's look at these stocks. First one, PARR, Pair Pacific, displayed a bearish headwind. Interestingly, it displayed a bearish headwind in daily 1 day earlier itself. So you could look at the daily bearish headwind and start to think of shorting. Probably could short yesterday right near the market open using fine-tuned chart. Just like in case of Disney, I shorted using daily bearish headwind and weekly bearish headwind came earlier. You could probably do the same in PARR, PARR, Pacific. Certainly looking weak, but right now I will not short it. Of course, it has fallen significantly and is near a daily trendline support. Let's move to the next stock, alt right arrow. BANF, Bank First, displayed a bearish headwind in the weekly. Daily is still in an uptrend. The bearish headwind is telling is not a time to buy now. And if you bought the financial stocks, banking stocks earlier, I did trade one of them. I shared it on the forum. I exited that with profit. PFSI, that was PFSI. I have exited that with profit. If you bought BANF earlier, maybe at this point using go with flow long setup, now is the time to protect profit in the remaining position. Using Q guideline, half position would have been or partial position would have been exited earlier. For the remaining position, one would apply trailing stop looking at the weekly bearish headwind. Let's go through the remaining stops quickly. CHEF. Bearish headwind is a reason for caution. Backdrop color is bearish. Shape is bearish. Daily has a trend line support. If this support is broken, that will be a bigger concern. Right now, there is a support, so I will not think of shorting it right now, but I will protect profit in existing positions in CHEF. Next, FCX. Material stocks were strong recently. FCX was one of them. It was moving sideways for a few weeks and now it has displayed a bearish headwind. Backdrop color is bearish in weekly. Shape is bearish. Reason for caution. There are multiple trendline supports in daily. If they are broken, that will be a reason to exit. Right now, I will not exit any long position I am holding. If I, for example, took a go through long trade on this day, partial profit could have been booked earlier. Remaining position may be held until these trend lines are broken. Not looking like a stock, I would like to buy now. Looking at the weekly headwind, daily bearish flow. Next, future fuel, FF. Again, bearish headwind in weekly, bearish flow in daily. Reason for caution, but there is a trend line support. We don't have a short setup now. Cautionary, but no short setup. Next, GCO. Bearish headwind, bearish backdrop, bearish shape in weekly. Daily opened with a gap down open yesterday and continued to go down. Closed with bearish flow, bearish shape, bearish pressure. Yesterday, right at the market open, it could be shorted using the gap short day trade technique. Provided the early range was narrow, let's check that out, GCO. And you could identify it as a gap candidate. Probably let's look at that, GCO. You could use Q Finder or you could use Q Elite Sonar. Had a bearish flow yesterday, bearish pressure, and had a gap down open, minus 0.7%. If we look at the intraday fine-tune chart, let's look at it using GCO, not Disney. Retrieving data from TradeStation to draw the pivot lines. early range high, early range low. Seems like a thinly traded stock. When it came below early range low, it could be shorted. Of course, keeping in mind we have to check the liquidity. Stop would be just above early range high for the day, and when it came to the pause lines, more than the risk distance was covered, so it could be closed. Partial profit could be booked. If we look at the weekly daily, the daily has trend line support. That would be probably a reason to book. Maybe instead of booking half, maybe we could book two-thirds of the position, or all of the position also could be broken looking at the trend line support. If I wanted to hold partial position, I would rather hold one-third of the position, not half, because there is a trend line support nearby. In any case, we came to these stocks looking at the weekly bearish headwind. Here daily also had a bearish headwind. So those were cautionary signals, and the cautionary signals are continuing. Was there any other stock? LPI. Energy stocks were strong recently. LPI was one of them, has displayed a bearish headwind in weekly, in daily also. There is a trend line support again. That's a reason not to short it now, but has enough cautionary signals. Headwinds in both weekly and daily. MTRX matrix service. Bearish headwind in weekly at watermark level, creating a false upside breakout, bearish shape, neutral color. In daily, false upside breakout, bear release, bearish indecision at the top, bearish flow, bearish breakdown, bearish pressure. This is looking weak. I would certainly not buy it, and if I am holding a long position, I'll be careful. MTRX. Was there any other stock? NOV, another energy stock. Again, bearish headwind in weekly. There was a bearish headwind in daily earlier. Yesterday, gap down open, sharp move lower after that. Pretty sure there was a very profitable gap short set up yesterday, and because it was so bearish, came down with bearish pressure. In this case, one could hold on to partial profit, maybe half position in this case, not one third, because it is looking very bearish on the daily candle bar. Let's look at another stock I shared on the forum, the last one I promise. I already shared it on the forum. It didn't have any trade setup, but it was looking like a stock where one would be cautious. Eventbrite, a well-known stock. Many people are probably bullish on that, but Q traders are different. Let's look at the forum post. Eventbrite, and I mentioned that yesterday when I shared it, 10:30 a.m. Eastern Standard Time, 16th March, the industry was actually strong. It was even accelerating. Accelerating plus strong relative score in interactive media and services. However, this stock was down. That was a reason for concern. When industry is strong and accelerating, but the stock is down, and what stock? Overvalued stock with negative earnings growth. Though 72% of your stocks are up, that is a stock to be cautious about. So I looked at the chart. It came to a very long-term watermark resistance from which there were multiple significant drops, and it created, you see this new indicator released some weeks ago, indecisive bearish candle at the top, created a false upside breakout. In the daily, it displayed a bearish headwind, didn't go below this watermark resistance yet when I shared it. It was down by 3.7% at that time, and I put a question mark there that if it could go below the watermark resistance, that would complete the false upside breakout in daily also. Weekly already had the false upside breakout. Daily also would have the false upside breakout with a bear release signal. On the up move, it had very high volume, so that could give some kind of box short setup. But I didn't want to share it as a trade setup because the industry was very strong, but I shared it as a cautionary stock, and I just remembered it because we were going through the bullish bearish headwind stocks. I don't know how it ended. Let's look at that. Eventbrite ended yesterday, closed yesterday. It could not close below the watermark resistance. You may keep an eye on it. If you are holding a long position in it, then no need to be overly cautious unless it could come below the watermark resistance. And if you bought much earlier, you may even wait for the trend line support to be broken. The next trend line support is far away, so if this trend line is broken and you're holding a long position, you may seriously consider what to do. This is an example of how you may use the Q techniques to track your positions and take timely decisions. Market is bullish. Let's look at the market ETFs one time. Market futures. Market is bullish but overbought. And this is S&P 500 E-mini futures. It came to the watermark resistance, and now in the overnight market, pre-market hours, it is displaying a bear release signal, apparently creating a false upside breakout. That is a time I look for shorting opportunities, not necessarily in the futures or S&P 500 ETF, but in individual. Not only not in futures or ETFs, but in fact I prefer individual stocks because then I can align the fundamental weakness as well. Now if S&P 500 is creating a false upside breakout, I wouldn't mind shorting a stock like Eventbrite. Not exactly Eventbrite because Eventbrite's industry was strong, but stock like Eventbrite, which is also giving a false upside breakout, and I would prefer to short the stock only if it is fundamentally weak. Eventbrite was fundamentally weak, but its industry was strong. I'd like to short in a weak, relatively weak industry. We'll see how the market moves today. Again, at 2 p.m. there is a major event, so it may not be a good idea to initiate a swing trade in the morning hours. 20 minutes over my 1 hour time. Thanks a lot for joining me. I look forward to seeing you in my next session that will be during the weekend. I will inform the day, Saturday or Sunday, on Twitter page. And if you are subscribing to YouTube channel, you will come to know of that from YouTube also. Thanks once again. Keep safe. And as I always say, there is no reason not to do that. Trade profitably. Thank you.